Welcome back, ladies and gentlemen. Sharp at 11 o'clock this morning, a Sunday morning, we will have Nirmala Sitharaman make a record of sorts when she presents her 9th consecutive budget. Now, ladies and gentlemen, one budget is being asked to do many things. It is being asked to support growth, to crowd in private investment, protect macro stability, and reassure markets. So essentially what we are expecting today's budget to be is going to be a dhurandhar budget. But in the times of political volatility that we see across the world, can the government really afford to give a big bang budget which is bold, or will it want to be more conservative? That is a question, of course, that will be answered in a bit from now. We'll be joined by our guests this morning. I'll introduce you to them in just a bit. Hi everyone, good morning. Thank you very much for your time. Manish, thank you. Head of Sales, Orissa, joining us on the broadcast. Dr. Sujit Paul, Group CEO of Zota Healthcare. Thank you very much. Good morning to you as well. Akash Bansal, co-founder and CEO of Vijaya Fintech. Thank you very much for joining us. And Rahul Pandit, member CII at the National Council on Tourism, is a member from Uttar Pradesh. He's also UPCM's economic advisor. Joining us on the group. Thank you all gentlemen for joining us. But first I'm going to go across straight to Kritika, who's joining us live from Nirmala Sitharaman's residence, from right outside Nirmala Sitharaman's residence. Kritika, it's what, 7:34, and I'm fairly certain that the finance minister is already ready to leave her residence, because before she actually gets to Parliament, there are things to be done, including having a cup of tea with the president.
Well, yes, in fact, it's an early morning start for all of us, and finance minister included. In fact, we're standing right outside her residence as well. At around 8:30 is when she's expected to depart from here to the North Block as well, with the Bahi Khata in her hand, the ledger, of course, of the union budget, and as you were rightly pointing out, all eyes on it. But before she reaches the parliament, and in fact the cabinet meeting, which will also give its assent and approval to the union budget, she'll also be meeting the president and taking her approval as well. So all of these crucial formalities will also be seeing starting in just a very short while from now. And as you were saying, all expectations, in fact, as a salaried person, for the middle class, of course, tax relief remains to be one of the top expectations that are currently to the people also that we were speaking to earlier in the morning. That is what they're reiterating. This being an election year, of course, we can also see a lot of major announcements coming in for those states as well, the way we saw it happen for Bihar last year as well. And with her 9th consecutive budget, it is also, as our sources are telling us in the finance ministry, expected to be quite a unique and in fact unprecedented budget as well, with both short-term and long-term goals clearly defined in Part B. So in just a short while from now, a lot more activity in this corner. Over to you.
All right, we'll leave it there for the moment and come back to your corner, Kritika, as soon as that starts. Thank you very much for joining us this morning. Dr. Paul, can I just come to you first, since you are associated with a sector that we deal with almost on an everyday basis, right? Healthcare. So healthcare has evolved, is evolving. It has to evolve, given that incomes are rising, given that we now have an aging population, and also given the fact that there is a certain degree of focus on chronic diseases. I want to ask you, realistically, what is the healthcare sector expecting from this budget? And I'm going to underline realistically here.
So thank you so much. As what I had mentioned yesterday in my pre-budget pointers, is that this will be one of the best budgets that India have ever seen in healthcare. As the Union Budget 2026-27 approaches, the Indian healthcare and pharmaceutical sectors are advocating for a shift from volume to value. ये आपको देखने में मिलेगा, from volume to value. And the industry's primary demand is to increase public healthcare spending to 2.5% of GDP. आपको याद रखना पड़ेगा, we are currently at roughly around 1.9%. And this is what will actually build a future-ready healthcare. Now, जो मुझे दिख रहा है, what I understand is that there will be a lot of focus on R&Ds, which will definitely be there, and the industry is a strong advocating for the restoration of the 200% weighted tax reductions on R&D expenditures. You will see a lot of PLI 2.0 coming up. So while the first production line incentive schemes, आपको याद होगा, focused on active pharmaceutical ingredients, the sector expects a PLI 2.0 on expansion that covers the medical device and diagnostic equipments. Now, for pharma, retail, and OTC, definitely regulation clarities would need to be there. Retailers are looking for clearer guidelines on over-the-counter, the OTC drugs that we say, to expand their market. They're projected to reach roughly around 98,000 crores by 2030. So there will be lots and lots that we would expect from healthcare. You will have a lot of focus definitely on the villages that would come through. AI and digital health would be a very strong focus this time, because our Honorable Prime Minister always spoke about that. And I think AI and digital health will get a complete different movement, where you will see Ayushman Bharat digital mission coming up very, very strongly, and that have to be a strong push that would happen. See, if you really see overall, I have told yesterday, this will be one of the best budgets in healthcare that I expect to come.
Okay. Can I just get in Manish here? Manish, there is a lot of talk about AI in healthcare. Can I ask, and there is, we believe, going to be a lot of focus on AI, but what exactly? There are people who are watching here saying AI तो सब बोल रहे हैं, लेकिन budget AI के लिए क्या करेगा? And how does that benefit the middle class in this country?
Firstly, very good morning. Now, in terms of the budget that I'm expecting, right? I mean, from an AI sector perspective, there has been a lot of progress the government has made in the last couple of years. The India AI mission is obviously the flagship program of the government, which it is allocated close to 10,000 crores over the next 5 years allocation, right? So, but what we see is in this day and age, and that we see it regularly, is AI is actually being implemented by a lot of these enterprises on a daily basis, right? On a regular basis as well. And it's not just the enterprises, it's even the government. The governments are also adopting AI in a lot of citizen-facing initiatives, be it healthcare, agriculture, or even your day-to-day activities as well, right? So we see a lot of adoption happening in AI on a regular basis. Now, what we expect from a budget perspective, obviously, is for AI to really flourish, GPUs are the most important commodity for startups like us, right? If we have to make any kind of innovations, obviously GPUs are the bottlenecks that we typically see in this industry. So what we are expecting is a lot of doubling down of the government on GPUs, particularly allocating them to startups, which will further fuel innovation as we move along, right?
But so Manish, there are a lot of people who are hearing you talk and saying, but AI is going to take away our jobs.
Right. Now, that will happen, right? To some extent, not every job. There will be a lot of new jobs which will be created as well. But yes, the lower service class jobs, which probably will get eliminated with AI to some extent, right? And there should be a policy initiative to actually reskill.
That is going to be the challenge, I think, Manish. The government is telling us that we are in a Goldilocks moment. The chief economic advisor has used that term, Rahul Pandit. He's saying, look at us. We have strong growth. We have low inflation. Our inflation is stabilized. When you compare India's inflation to global levels, we are far lower. Our fundamentals are stable. Yet the mood of the nation is cautiously optimistic, because there are things like jobs that still need to be created. Are we creating enough jobs, enough decent paying jobs for our young demographic? I think the answer to that question is no. But Rahul, as a member of the CII, National Council on Tourism, I want to ask you what you expect, because India will need growth drivers, and tourism is where we have our hopes high.
Thank you, Hina. You are absolutely right. And the Prime Minister has already given a clarion call saying reform, perform and transform. And I think this time, the Honorable Minister of Finance, she has a big task ahead of her to actually channelize Saraswati in the policies to reform, to channelize Lakshmi to perform for prosperity, and to channelize Ma Durga to transform. And you're absolutely right on the need for jobs creation. Tourism is actually amongst the largest employment creators in India. It is 6.7% of India's GDP and 9% of employment. And it generates $250 billion contribution to the country. What is the big opportunity? especially as you were speaking of AI, because tourism is going to be an island where human connect and human jobs are critical. So if we quickly see in our neighborhood on the west, UAE, 15% of the GDP is tourism and Thailand is 20%. In the next 10 years, if we aim with this budget to have a balance sheet approach and we take India to 20% of jobs creation through tourism, it would effectively mean adding another $500 billion to our economy and creating 100 million jobs. You know, that's like adding a mid-sized G20 economy to us.
True.
But if we take this balance sheet approach, what is most critical is, you know, you can't raise elephants on peanuts. If tourism is today giving 9% of jobs to the country,
Correct.
the allocation in the last budget was 0.06%. So 2,541 crores for an industry which is generating 250 billion. Now, what is hugely critical for that is two things structurally. We have to increase and scale up our supply. You know, in India, we have only 200,000 recognized hotel rooms. UAE has 220,000. Vietnam has 800,000. Thailand has 900,000. Japan has 2 million.
Wow.
And China has 7 million. Now, and the advantage is, with the strong government in place, we need to be building India for a Viksit Bharat, that balance sheet. So what are the top two things we need to do? First is we don't have to reinvent the wheel. Let's see what's already happening in India. Maharashtra and Assam, in their latest tourism policies, have a 15-year SGST reimbursement. That should be rolled out nationally. Odisha, in its latest tourism policy, has a 30% capex subsidy, effectively for viability gap funding. That has to be rolled out nationally.
Okay.
Along with that, India needs today a $10 billion tourism fund, which is structured like an InvIT, you know, with both private and government participation. And we could consider assets of, for example, ITDC and the state governments to be the seed there.
Okay. Okay, Rohit, I'm just going to turn our focus now to Akash Bansal. He's the co-founder and CEO of Vijaya Fintech. Akash, I wonder whether you were with us on the broadcast when he started at 7 o'clock, because we went to our reporters across the country and they were speaking to people across the country. And the one thing that cropped up again and again, Akash, I'm fairly certain this sawal has been asked to you by 1 million family members as well. This gold ka price and silver ka price is going too high. The point is, you know, gold and silver imports have surged to record highs. We know that. What that also ends up doing is that ends up widening our trade deficit. It puts pressure on our rupee as well. Therefore, the question and the fear is, will import duties on precious metals be raised? It has been done before. Will it be done again?
I think, thank you. So my view is that, you know, we have been telling our country Bharat as Sone ki Chidiya before independence. And in the 2047 Viksit Bharat vision, can we become the Sone ki Chidiya again? Is a question that Finance Minister has a tough job ahead in terms of presenting today's budget. I think I would like to draw some points, on going back to 2004, where long-term capital gains was abolished and STT was introduced, but that promise was broken in 2018 by reintroducing the long-term capital gains to 10% and again increasing it to 12.5%. I think if we have to become that Sone ki Chidiya again and bring in lot of inflows and give relief to Aam Aadmi, the middleman, we believe that the long-term capital gains either should be abolished or should be at least graded structure, where, at least 5 years plus holdings should be tax-free. I also believe that, imagine you have one passport for one country, and now if a foreigner comes to India, and he has to apply different visas for different cities. If he has to go to Delhi, he apply for a different visa. He comes to Mumbai, he applies for a different visa. That's exactly what is happening in financial services, where we don't have one nation, one KYC. I think a lot of thought processes has to be put across, where can we bring in one nation, one KYC model, where if you have a bank account, for example, why do you even have to open different KYCs?
True,
and,
agreed.
And I think from a startup point of view, I believe that one thing that we all have been asking for many years now is, you have been taxing us on dreams. ESOPs have been taxed when you vest it. If India has to become the startup Silicon Valley for the world, madam, please allow ESOPs to be taxed when on realization, not on the dream or on paper. Well, I think one nation, one KYC, bringing back the long-term capital gains, or abolishing, helping the middle class, provide capital to startups.
Akash, I feel your pain on taxes. But the one thing we know is that there are only two certainties in life: death and taxes, and of course, Mr. Trump saying and doing something stupid again. We'll leave it there for the moment, gentlemen. Thank you very much. This was a brief chat, but a good one. Akash, good to have you on the show. Rahul, thank you very much for your time as well. Thank you, Dr. Sujit Paul, for being with us, and thank you, Manish, for being with us on the broadcast as well. Ladies and gentlemen, with that, a quick break. Our budget coverage continues right here on Times Now. Do stay with us.